let me now bring on board a very special guest, Ramdev Agrawal, Joint Managing Director and Co-Founder of Motilal Oswal Financial Services. Ramdev, good to have you back. Thank you for joining us. Ramdev, I guess depending on whom you're asking, you will get a different answer. Yes, Indian markets have recovered very smartly from the recent low, but the upside clearly is looking capped.
Yeah, because every time it comes to 20,000 and starts stagnating there, but every time it comes to 20,000, the valuation is cheaper because earnings have caught up every quarter. So now markets are much cheaper than last 20,000 peak. So markets are becoming attractive, and that's why probably the lower levels will be little higher. So markets are comfortable.
But Ramdev, do you see potential for the market to rally more, and could we scale up to say 6,500?
See, energy on the earnings side, it is not there that much. Earnings have been pretty steady, and even the next year's estimates looks to be maybe looks like about 9-10% kind of growth. So earnings don't have much of bounce to push it forward. But what can change is the interest rate environment, in the sense that if there is a dramatic fall in the interest rate for one reason or another, whether it is because of the global commodity prices or just the year-on-year comparison, base effect and all, if inflation were to fall dramatically or commodity prices were to fall, so we could see some dramatic change in the interest rate scenario, and that can lead the kind of market to different levels. So those are things which are interesting to watch.
Ramdev, you made a point that markets are looking cheap because earnings have kicked in. But the stocks you track, the stocks you monitor, and the stocks you like, they are not cheap. I mean, for the stocks, the consumer names and for the pharma names, we've seen a further PE expansion.
Yeah, that's been the kind of story all over. All the consumer franchises have gone up and actually still being lapped up, and at times at a scary kind of valuation. So 40, 45, 50 P multiples. So that's becoming a scary trade, in the sense that you need to be really long term to make some money out of that. So clearly you have to start looking at the very high quality cyclicals, probably to find franchises. Say like today's telco result. That clearly is one example where you can find big global, kind of franchise in SUV, global franchise of Land Rover, available at single-digit P multiple. So you have to, I'm not very good at understanding global luxury market, but those kind of opportunities will come up now, which is going to be very large. Say oil sector deregulation has come in, so there will be some opportunity there. Telecom is kind of coming back. So I think there will be churn of the stocks which one should be buying incrementally in the portfolio.
Ramdev, what about the other auto one, Hero MotoCorp? Do you think this is start of a big rally in the stock, what we've seen in the last two trading sessions, owing to the weakness in commodity prices and the weakness in yen?
Yen would not be that big a factor in this company. That's only for the royalty, whatever payment they have to make to Honda. But clearly, the overall raw material price decline would lead to margin expansion. But the real challenge is the competitive situation which is there in the marketplace today, where Honda is trying to make a very rapid entry into the domestic market, and domestics are trying to make a very rapid entry into global market. So how exactly this thing gets settled, more particularly the competition within India, and that will keep the growth of domestic measures like Hero or Bajaj in domestic market at some kind of a low single digit kind of thing. So how do you value in this kind of situation is a challenge. But otherwise, margin situation is going to be very comfortable.
Ramdev, let's talk about two stocks which you own. One side you got Kane India, which is trading at a P multiple of 5 times. Other side you got Nestle, which is trading at a P multiple of 45. So are you better off owning Nestle or Kane India at the current juncture?
Obviously, market is telling me that you are better off owning Nestle and not having Kane, but still beats my logic, and only time will tell whether Kane makes money for me, because the cash flow is very strong and it's a dollar asset. So as the rupee weakens, the profit and profitability both should improve significantly as we go forward. So effective, not even 5 P multiple, it might be net of cash, it might be 3-4 P multiple. So it's it fails me. best of my past experience, this should be a attractive buy, but somehow market has not obliged.
Ramdev, what about SBI? Huge earnings disappointment. Is there any recovery in sight for this one?
Yeah, I mean, SBI, you have to listen whatever happens in the quarterly results, and any analyst or anybody trying to make out anything out of their earnings program is tough. Except that if there is a dramatic fall in the interest rate and the economy actually starts recovering, which should happen in the second half of the year, that will definitely benefit, because this is the proxy to economy. And if economy has stress for whatever reason, government policies or high interest rate, lack of liquidity, lack of competitive situation in the global marketplace, high current account deficit. So all the problems will show up in the balance sheet of SBI. So as the things start settling down, my sense is that we have seen the worst, or we are passing through the worst as far as balance sheet and P&L of SBI is concerned. I think 12 months to 18 months should be quite interesting.
Ramdev, I'm getting a sense from you that you are now making a case that it is time to revisit the value end of the market. You mentioned Kane, you're making a case to buy into some telecom stocks. So is Ramdev Agrawal, the man who has championed owning consumer names, is now making a case that it's time to sell out of consumer names and look at value stocks?
No, I never uttered a word about selling out. Okay? So, if you are lucky to have bought Nestle or Lever or some other franchise in your portfolio at reasonable prices, please hold on to it. Don't be too much worried about slightly higher prices and maybe underperformance for 12 months or something like that. But I'm not even suggesting that one should pair the holding. The issue is that incrementally, where do you put the money? Should you buy at 45, 50p, or should you start looking at some other large but unpopular companies? See, one of the segment of the way to pick stocks is that it's very either you buy a large unpopular company, or you buy franchises, or you buy small growth companies. So now I think time is for very large unpopular companies, because as the market rallies in next 2-3 years, you will see that some of these large companies which have a lot of cash flow, a lot of book value, good franchise, good business, I think someday people will revisit them and say that, okay, I mean, at a price to book 1 or less than 1, these are very reasonable valuation, and give them market return or maybe even higher return. Typically, in a bull market, these companies, they do very well. That's been the past experience, and I hope market returns.
Ramdev, just hint for us, what sectors are you talking about?
Yeah, I told in the beginning only, I mean, some companies from the oil sector, telecom sectors, then even some of the automotive companies. So, you are going to see massive, kind of a turnaround in their valuations from single-digit P multiples to maybe even double-digit and all. Because last decade has gone into seeing some of this irrational policy practices by the government, say oil companies. I mean, they suffered completely in the hands of very bad policy making in last 10 years. So now the policy is getting corrected because country's finances have gone for dogs. So the next decade will see the little better policy environment in terms of fiscal deficit and current deficit. And this will benefit some of these sectors like entire oil and energy sector, including, I think Reliance will also be significant beneficiary of repricing of gas and oil and maybe even the diesel and petrol. So I think some big games will happen in next decade on this.
Right. So besides Reliance, are ONGC from the oil and gas space and Bharti from telcos now a buy?
No, you are putting the names. I'm just telling the sector. So you can, see, individual companies, you have to go, say, Idea is there in your telecom sector, where there is no global, complication in terms of balance sheet. They don't have any, I would say, capital commitment overseas, and Idea is a pure play India kind of thing. So I would be aligned to look at Idea for a local play. In here in oil and gas, Reliance is there, ONGC is there, you have all the oil marketing companies. So there are a lot of very large companies available at some crazy prices in some cases.
Idea, your big idea for FY14?
It's already played out to some extent, but yes, I think it should keep doing better.
Ramdev, what about pharmaceuticals? Of late, the news flow for pharmaceutical has been quite mixed. Sun Pharma has delivered, but Ranbaxy has failed. Cipla numbers have been okay, but Lupin has demonstrated excellence. Do you think best part of the rally in pharmaceuticals is now behind us?
No. I think pharma story is going to build on, because see, pharma and tech, these two are the foundation of Indian export story. So pharma is still new companies are coming up, and the old companies are also becoming led by Sun Pharma. I mean, that is giving size and kind of aspiration of so many people to become next Sun Pharma and all. So I think Indian pharmaceutical companies have tremendous edge in the global marketplace, and with the weak currency, I think we are going to see best of Indian pharma. So I would not think that, individual companies would have different strategies, and since it is B2B business, you don't get to feel what's happening in individual company by common man. But the analyst or the people who are tracking very closely, they would know that this story is very big story. In fact, some people say that Indian pharma story could be as big or bigger than Indian tech story.
Ramdev, really appreciate you taking the time out and speaking with us today. Good to have you on the show as always.